Hello, this is Charting Man Dan of TheChartGuys, where we teach the little guy and girl how to utilize charts to manage their own trades and investments. What do I mean by the little guy and girl? Well, we just had two directives signed halting the implementation of a rule that requires financial advisors to act in the best interests of their client. Let that sink in a little bit. The big wigs on Wall Street can play with your retirement and hard-earned money without your best interests at heart. We currently have hundreds of members taking charge of their financial future, and we would love for you to come check out a free week with no credit card required to see if our services would be beneficial on your path to financial independence as well. What we offer, we have a separate course of over 5 hours in length on when to enter and exit positions. And in terms of what we do daily, we have nightly videos, key levels updated each morning before the bell, 2.5 hours of live daily webcam coverage in the morning and in the afternoon, and over 7 hours of educational videos. All of these links can be found in the description of this video. Come check us out. Thanks for watching. Let's get on to the technical analysis. Hey everyone, checking in on oil heading into the weekend here. It's March 24th and oil is still weak. The bulls are still trying to turn things around. We've got some OPEC action this weekend, which could be a catalyst. It's really the bulls will take anything that they can get because they need a catalyst, as they have been trying to bounce. A weak bounce attempt led for further downside. We retested support. We do have a double low just above $47 psychological support, but we've been rejecting from the 10-day moving average resistance, which has rejected the last two attempts. The bulls did close strong today, and we need to see follow through. The first resistance I'm looking at is the high of yesterday on Thursday, 48.45. The 10-day moving average resistance is going to be right there, and then we're looking up at 49.45 and 49.59. So that double bottom is a very clear must-hold support level down at $47, and we'll see if the bulls are able to rally. If we do see that 10-day moving average become support, we will see a bullish MAC decross, and we've got this RSI coming off of the oversold level just now. So the bounce is close to getting started here, and we already saw a weak bounce attempt, and it's really going to be up to bulls showing up after this OPEC, and on Sunday night, they need to see follow-through heading into this next week. So the weekly time frame for USO, we've been seeing weakness here as well, but again, pretty much the exact same range. The support is very clear, the resistance is very clear, and the bulls need to see some follow-through. We are still in a longer-term uptrend in terms of the last year. Obviously, in terms of the longer-term trend over multiple years, it is a downtrend, and the bulls are trying to reverse that at these levels. So we pulled back significantly. We've been watching, if you've been following these videos for months, we were watching the $54 resistance level, and time again, we got well above that level. We could not close a weekly candlestick above $54, and then we saw this dump. So it was a big-time setback for the bulls, absolutely, but it's not game over because we do still have these higher lows, and the bulls do still have control over the last, let's call it 15 months. So bulls want to see some follow-through, because if we don't, and if we break $47, this uptrend support line is going to be down in the mid-45s. Looking at USO on the daily time frame, we do have the bulls attempting to show up. We had a bullish reversal candlestick Wednesday, no follow-through nor confirmation on Thursday. Little bullish reversal candlestick here Friday. We did close at the high, and the bulls need to get over these exponential moving averages. When I'm looking at bull and bear flags, I use these exponential moving averages as a bit of a gauge for me to determine whether or not that pattern still stands as a possibility. And as long as this 4-period and 8-period exponential moving average are resistance, the possibility of it being a bear flag is high. Where we had our bounce attempt, there was a bear flag back here, couldn't get over exponential resistances, another leg to the downside. Now we're testing these exponential resistances again, and if we can get over them, pretty much the same story as oil that we just looked at. We'll be looking for a bullish MAC decross and for the RSI to be coming off of that oversold level. So in order for the bulls to show up next week, I'm looking at 1014, and then we'd be looking up, it'd be a really bullish break if we could get over 1043 and break the high of the last bounce attempt. The weekly time frame, a much more clear lower low, and you can see US oil wasn't that clear of a lower low. We do still have that same higher low pattern on the weekly time frame that is still intact, but the bulls are struggling. So if we do see a bearish reaction to the OPEC meeting here over this weekend, it is going to be another leg to the downside and significantly bearish for oil. And the bulls really at this point are just pulling out their hair because the bulls are really struggling on the daily time frame to see any kind of follow through. So that's what they're hoping for this coming week. And whenever I look at some patterns and I have the possibility or the opportunity to be looking at the inverse, I will always check out the inverse because there are often times where I can see clues. And if you saw, I did that in a natural gas video, I believe it was last week, where the daily time frame for the bulls, I wasn't really seeing anything, but then I saw a bull flag show up on the inverse ETF that really stood out to me, and that did end up playing out. So I look at DWT here just to see it from a different perspective, and rather going to the downside, we're looking at it from the upside here. And what stands out to me is everything's the same in the sense that it could be a bull flag of consolidation. We have exponential moving average support, but when I look at the weekly time frame, these big upper wicks show a lot of profit taking to me. So that could tell me that some consolidation is due after all of that profit taking the past 2 weeks. We did not confirm the bearish reversal candlestick from last week, but we are seeing another big upper wick of profit taking this week, and we will be looking for some short-term consolidation in the near-term future. And again, if we get that bullish catalyst over this weekend, we will be looking back up towards the mid to upper $49 range for this oversold bounce to finally get some momentum. Bulls have been struggling to find momentum, and that could be a potential here over the weekend. And in terms of holding into this weekend, I did get some questions on, what I think the reaction to the OPEC will be. And to be honest, you might as well flip a coin, because I personally am not doing fundamental research, which would be required in terms of, dozens of hours to try and get an edge as to what the reaction is going to be. And I assume that the vast majority of people out there are not as well. So you see all these people on Stocktwits posting, the OPEC meeting is going to be bullish because X, Y, Z. It's all just opinions. And unless, someone has been putting in, like I said, tons and tons of hours of research and really, looking at a lot of fundamental perspectives here, it is all just an opinion. And I want the odds in my favor when I'm trading, which is why I use technical analysis. But when technical analysis gets thrown to the wayside and we look at earnings reports and inventory reports and things of this nature, I would rather be cash and then make a trade based on the reaction when I have some price history and some levels to be going off of. So that's just a personal opinion of mine. We'll see how we go heading into next week. I appreciate you watching, and I hope you have a great weekend.